and welcome. This is Mary Ellen McGonagle with the MEM Edge Show, brought to you each and every Friday afternoon. This is the show where we put you in front of where the action is in the broader markets, all with an eye toward helping you prepare not only for next week, but also beyond, and also with an eye toward putting you in front of these areas and stocks that are poised to greatly outperform the broader markets. Let's go ahead and get started. The agenda today, we are of course going to go ahead and drill down, take a look at where the markets are. How did we close today and this week, and what does that mean going forward? Also, we're going to review innovation as one of the drivers for outperformance among not only stocks. We're going to take a look at some ETFs as well. And again, there are areas that are seeing really superior outperformance. It has everything to do with being driven by demand, and that demand is coming from innovation that's taking place that's helping people during this historically unprecedented lockdown period due to the pandemic. And then also using ETFs to play these powerful themes. So in addition to looking at stocks, we'll go ahead and look at ETFs. Also IPOs. We've had a number of new issues come to market. I'm viewing this as an ideal time to raise capital. And within that, several of these stocks are just having these explosive triple-digit moves. And in essence, the demand for those stocks is also playing into this concept of innovation. So we're going to have a real theme throughout today's show. And then also we're going to take a look. Defensive areas of the market were the better performers this week as a sector, as groups, and there are some leadership names that bear taking a close look at, because in addition to being in defensive areas, they have growth prospects. So a nice double underscoring for those names. I do like to take a quick look, share with you some of the news that occurred during this shortened holiday week. Again, just with an eye toward building a platform, helping give a sense of why certain areas are doing well and what in fact is going on. And number one, we are seeing a record number of new coronavirus cases. The markets by and large have been really able to shrug that off, and that positive sentiment is what you need as a backdrop to continue to push these markets higher. So that is in place. We also saw some nice economic reports this week. Among them, manufacturing bounced back in the month of June. And we also saw explosive double-digit moves in several FANG stocks. You can now modify that FANG so that it's FAAMNG, because we can add Amazon and, of course, Microsoft to those other names: Facebook, Apple, Netflix, and Alphabet. Big moves there. That's constructive for the broader markets. In my book, it's also an indication that institutions are coming into the market. They don't want to miss what appears to be another leg up for this bullish phase in the markets. And then also we did get early vaccine results out of Pfizer, and that could be one of the reasons that the markets have been able to shrug off this record number of new cases. I would argue there are other reasons as well, simply because the number of deaths related to these new cases is diminishing. So that's good news. And then also today we did get June non-farm payroll, and it surged by 4.8 million. This is another positive bullish surprise. A lot of that was the reopening, restaurants and so forth. So unfortunately, it may not be a continuation of that non-farm payroll, but it certainly was bullish for the markets this week. So let's go ahead and dig in, take a look at the broader markets. Here we are looking at a daily price chart of the S&P 500. So what we can see here, as many of you that watch the show regularly, I do like to pay attention to the broader markets relative to these simple moving averages. This green line is your 10-day simple moving average. This pink line, 21-day. This red is your 50-day and the blue is your 200-day simple moving average, all with an eye toward ideally having the broader market indices breaking back up above these simple moving averages. Oftentimes they can act as resistance. We can see during this bear market phase, any upside rallies for the most part were met with resistance. Once we start breaking up above through these simple moving averages, we are now entering a more bullish phase. So this week, bullishly, the markets did go ahead back up above each of these moving averages, which is good news. We can also see that the RSI is positive. I'm just going to go ahead and pop in the stochastics. This is another momentum indicator that I like to use when I'm looking and examining broader market indices. And we can see that the stochastics are positive as well. So we have the green light. The broader markets are looking very constructive. Let's go ahead and look behind the broader markets and take a look at what is going on, where that strength is within the broader markets, the S&P 500 in particular. So now we have the 11 S&P 500 sectors, and the reason we want to uncover where that strength is, this is going to tell you where the money flows are going. Where do the markets and investors have belief, and it's with an anticipation that there will be continued money flows into those stronger areas. So what I've done again is gone ahead. The 11 sectors are populated here. This is a 2-month daily price chart of those sectors. Gone ahead and added that RSI, that relative strength indicator, sorted it in descending order. Again, up here in the upper left are going to be your stronger areas, down to your weaker. So front and center, as it has been here certainly recently, are technology stocks. Very clear cut in their leadership status. This XLK tech group was the first to bullishly break up above, and this was back in late April. Here shortly, I'm going to share with you the strongest underlying groups within technology. So a lot of superior outperformance. And for those of you that follow my work, my MEM Edge report, we were all over this bullish move and then those strong areas underneath. And we see continued strength. So for those of you that may think or feel if you did not capture this move, there certainly is quite a bit in the way of upside ahead of it. I'm going to go ahead and pull up a weekly chart here just to give you a little perspective as to just how lengthy these moves into particularly technology. This is an area that is seeing the most in the way of innovation, and it really is keeping individuals, businesses connected. So back to our view of the other areas. We talked about this last Friday, this move. This is the XLB materials. This is all about gold. So we are seeing a continuation move this week into gold. It has crossed bullishly above that 1800 level. So a lot of, for you gold bugs, if we have time, we can get into some of the names here. And then XLY, this is consumer discretionary. I'm going to share with you from here where within discretionary is really popping, but one of them absolutely for sure is going to be Amazon, heavyweight in this XLY grouping, and it has bullishly broken back above this shorter term simple moving average. So a lot of vibrancy there. Of course, a lot of areas are suffering as well, but we of course want to focus and will on where the bullishness is there. XLV, healthcare stocks have been languishing here of late, but latter this week we did get a nice pickup, and it's all about a group I'm going to share with you in our next segment here. And from here we can see real estate stocks. I talked about some of these defensive areas doing well this week. XLRE is real estate development operations as well as REIT stocks, and the group was up 5.6%, the sector. That's relative to an S&P that was up 4.5%. So we are going to dig in. There are about 7 stocks in there that I feel you absolutely need to be aware of. And so then from there, of course, we drill down and get into some of these weaker financials just can't get out of their own way. And energy, of course, is languishing as well. So one other way that we can drill down even further beyond these sectors, because it's one thing to know which sectors are exhibiting superior outperformance and strength. More important and really more relevant would be to get behind that. What areas among and within technology are driving that superior outperformance, as well as other sectors. So I've gone ahead and populated this candle glance view with each of those broader market industries, the NASDAQ, the small cap Russell 2000, as well as gold. We'll take a look at that. But then now we want to see within technology, and of course I'm steering you. This is all about the work that I do at MEM Investment Research, is all about uncovering that strength, where the growth is. And so within technology, I've gone ahead and put IGV, that's that higher growth software ETF. Also semiconductor, SOXX is in here, as well as some other areas. So I've gone ahead with that RSI, relative strength indicator, descending. We'll go ahead and update this and take a look. For those, again, that know my work, this will not be surprising at all. But IGV, this is the ETF for those higher growth software stocks. Huge explosive move, very much in line with that tech sector group chart. And this is all about cloud computing and keeping people connected, not only businesses, also students, individuals. So a lot of big winners in here, and the prognosis looks equally strong even beyond this lockdown period. These management of many of these cloud-based firms are finding that these corporations that were forced to go digitally into cloud computing are in fact finding it to be the way of the future. So another aspect with software is they do have software as a service, so a lot of monthly and annual contracts that will continue to keep these guys outpacing. So that's certainly the strongest area, not only within tech, but within the broader markets. And we can see gold. Now, I did talk about healthcare picking up this week, everything to do with biotechnology. This is IBB, the biotech ETF, a nice advance here. Again, those of you that follow my work will know that we've been all over this, because biotech stocks, when they, there are about 3 different characteristics and reasons why biotech is advancing. A lot of it has to do with technology, innovation, a lot going on. But when we break out, this is a monthly chart of IBB, and the longer term your base, the longer the breakout. We're entering a 5-year base breakout. And let's go back here to this other period of innovation for biotech. This base breakout here, 2012, this was a 10-year base breakout, and take a look at that advance. So biotech is another area that you should, at the very least, have some representation. And if you're not inclined, IBB, the ETF, would work just fine. I talked about retail, XLY, Amazon being a big part. Here's another subcategory within the S&P, and this is the strongest area within retail. This is XRT. This is the S&P 500 online retail ETF. So this is where your strength is within retail. Certainly is going to be online. Again, that locked down consumer is getting much more comfortable buying their goods online. So a lot of clear-cut outperformers in that online retail space. Semiconductor stocks here as well, waffling a bit in here, but net clear outperformers. And this is this semiconductor chips are used in pretty much every area of the economy, and they are a big part of, again, keeping people connected and helping with all the innovation that I mentioned to you. So I'm going to go ahead and we're going to take a brief break here. When we get back, lots more to cover with those IPOs, ETFs, and so on. So we'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. I'm going to start this segment by taking a quick look at a couple of IPO stocks that have really had these explosive moves. And this is so that we can then meander from there and take a look at some other areas that are being equally impacted in a bullish way. This particular stock is Lemonade, LMND. The stock did come public today. Take a look, up 140% on that gap up. Now, what we're looking at here is a 15-minute chart so that you can really capture this gain and get a sense of really how explosive this stock was. And I can tell you the stock is not in the sexiest of businesses. They are a provider of rent and homeowner insurance, but their big reason for this big push here is because the company is they use artificial intelligence, big data algorithms, so they're really all about streamlining buying of insurance, the filing of claims. You'll get paid for your claim in 3 seconds, for instance. They will approve you in 2 to 3 minutes. So all about using technology to really make this insurance purchasing and also process streamlined. 70% of their customers are under 35 years old, so they are finding that 90% of their new clients are not coming from other insurance companies that they might have a loyalty to. So the growth prospects are really quite strong. More importantly is the concept of this innovation into digital based. Let's take a look at another IPO that came out earlier this month. This is Vroom, VRM, and this particular company, when they did come public here, the stock surged 118% on that June 9th IPO date. And the company provides an e-commerce platform for purchasing new vehicles. And again, all about digital innovation, keeping people connected, and the idea that you can purchase a vehicle without having to go in person. So the growth prospects are really quite strong for this company as well. So from here, really what I wanted to do was move on and take a look at a couple of other stocks that are in the forefront as far as having innovation and really just kind of driving home that concept of being in front of these stocks that have more in the way of growth. Now, this is ZM. Of course, that's been a big winner. But another stock that I did want to share with you that is experiencing potential pickup here in demand. The stock is Zillow Group, and they are involved in real estate. Now, for many years, the company quite simply was a platform for real estate agents who would buy leads from them. They provide housing price information and so forth. But the company is really re-emerging. They are re-eventing themselves. They have a platform called iBuying where you can they will purchase your home, but they'll also provide mortgage, renovations. They will do title insurance and help you with moving. So they're all about streamlining that home sale process, and a lot of money in that title insurance mortgage type of payment, and it's a big growth area. So this is one area. And then take a look at a competitor that has been doing what Zillow is moving into. This is Redfin, RDFN, and they are in the real estate operations. I'm pointing this out just to show you the growth prospects in this space. Redfin is addressing that $1.9 trillion transactional. There are a lot of transactions that take place, not just commissions. Also, we talked about title insurance, mortgage, and so forth. And it's a huge addressable industry, and Redfin is taking it under their arms. They are doing a great job. So just again, pointing out that digital, that concept of streamlining. And another one that we can take a look at, CVNA. This is going back to that car industry similar to Vroom. And they're all about, again, digital car sales, no need to go to a dealership. And they also just opened this week. This gap up today was on news that they're providing the platform to car dealerships. They're going into the wholesale industry as well. So just again, a way for you to get in front of some of these growthier stocks. Let's go ahead and move into another area that is also benefiting from the AI movement, the Internet of Things. Again, this all going to digital, and we can take a look at some ETFs that are benefiting from the shifts that we are seeing. One area is that concept of robotics. This is BOTZ. And we can see that the stock had an explosive move out of here. This is all about coronavirus. I'm going to change that on the bottom there. It's a little distracting to me, but all about coronavirus and this new economy where a lot of these robotic devices can take the place of humans that could very easily call in sick and not be as readily available. So there's a lot going on robotically. BOTZ, I would argue, is the leadership in this area, and we can see it setting up to potentially, if it were to break above this prior high on volume, because we do have a positive RSI and MACD. Another area is cyber security. With all this move to cloud computing, we are seeing the need, and corporations are spending on cyber security for their networks. And this is HACK, one of the premier ETFs in that space. Another one that raced to new highs, has been consolidating for 4 weeks now. And a lot of times you will see this in leading stocks, leading groups. They'll charge to new highs, and there inevitably will be a need for a period of back and fill consolidation. So we had the stock, this ETF go down a bit here, but it is experiencing higher lows here, and that's constructive. You have a positive RSI. If we can see this black line cross up through the red, we could easily be on deck for another leg up. Another area that has seen one of the largest in the way of streaming as far as investors putting their funds to work in this area is socially responsible investing. And this is despite COVID, it's one of the areas that has seen the biggest, certainly initially, out of this bear market. And this is another area that this is ESGU, and they again are one of the premier larger MSCI sponsors them, but it is an ETF all about socially responsible investing, and that's clean air and so forth. So we can see the stock ETF hit a new high and is consolidating in here. Again, same dynamics. The RSI is positive. If we get that nice crossover on the MACD indicating that the momentum is shifting, that would be quite constructive. One last area on these ETFs is iClean, ICLN. As you can imagine, it's all about clean energy, and we can see that it did have that nice gap up breaking out of this 1 month base. This is what you want to see in those other ETFs that I mentioned, and we are experiencing it here. Nice volume on this week's pickup. We can see this MACD here is just now poised, this black line poised to come up through the red, and we do already have that positive RSI. And then one area in and among this concept of alternative energy, clean air, is we can take a look at Plug Power. The reason I'm pointing this out is this is one of the best performers among renewable energy. And so this is really underlining and underscoring for you the this area certainly is under high demand. One other area that another stock that's in that group, not the best of charts, but this is Bloom Energy. The stock is up 30% this week. They just signed a contract with Samsung. They're going to be providing fuel cell energy for these huge tanker ships. So it really is a vibrant area, and oftentimes you can utilize these ETFs as a way to participate. This is Invesco Solar Energy, TAN is the ticker symbol. So I did want to go ahead and share that with you, again, as a way to get in front of these areas that are seeing really innovative advances. So I did also want to talk about, let's take a look at XLRE, and I talked about that being the top performer for the week. So what you can see here is that it's been really fits and starts, and with the real estate investment trust, and very rightfully so, with unemployment hitting new highs historically, and a lot in the way of we're opening, we're not. So a lot of areas of REITs have had hopeful uptrends that were reversed, and all about certain areas, potentially people not being able to pay their rent. Also, hotel REITs have really been underperforming because travel restrictions and so forth. But I will share with you that there is a couple of areas in REITs that are outperforming. So let me go ahead and share with you a way, and you can utilize this screen that I'm sharing with you really for any sector or area of the markets. We talked about clean energy, technology, semiconductors, software. So let's take a look at this very simple screen. I'm using a service called FinViz, really only 4 criteria that you can use any screening that you may have at your fingertips. So let's take a look at it's called technical here, but we can take a look at the criteria. Very, very simple. I want to see within this group all stocks that are above their 20-day simple moving average, above the 50-day, and also above that 200-day. Similar to when we talked about the S&P, you want that stock to be above its area of potential resistance. So REIT stocks in particular, there are about 240 real estate investment or real estate stocks. Let's go ahead over to this other area, because then from there I just popped in real estate. So we were able to drill that group 240 down to 40 stocks. And so these are your winners or your leaders. And so what we can do from here is go ahead, I'm going to share with you these stocks, and we can talk about why, unlike some of these other beaten down areas, these are outperformers. So this first one is AMT, American Tower, not your most attractive chart, but we're looking at a daily view here. And what we can see is this is similar to those other areas that I referenced where it powered to new highs, and for the last 4 weeks has been in a bit of a sloppy but back and fill phase, breaking out of that base today. And AMT, they lease these telecommunication towers that are very instrumental in not only bringing 5G, which is providing faster speed to locked down certainly employees and so forth. AMT, as I mentioned, they also, these towers, they are also part of the digital move, and as far as helping move data quickly, they have their devices on the sides of major buildings and so forth as well. This is Crown Castle, CCI. This stock is a little higher yielding, 2.8% versus AMT, which is 1.6%. And then that is one area, is those towers. One last screen that I did want to share with you, and it is taking a look at, quite simply, stocks that are up this week. We're going to look at all stocks. Hopefully I can get to this, and performance, and take a look at stocks over the last 5 trading days that are up 10% or more. The markets were up 5%. So again, really quickly, an easy way to get your arms around where that outperformance is These are your winning stocks, and this is all about with an eye toward continued outperformance. So I'm going to leave it with that. For those not familiar, take a look at my MEM Edge report. I'm all about getting you in front of, we've been able to identify a lot of these leadership names, and we are continuing to add those stocks. We also provide exit strategies to you, as well as really defined broader market insight and sector work as well. So have a great long weekend, and we'll see you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.